So Bitcoin and the entire crypto market just went through one of its biggest drawdowns in over a month. Price went from high 50Ks up towards 57 is the peak right now for Bitcoin. And we dipped all the way down to low 40Ks or 45K on some exchanges. And it happened really fast, almost immediately for Bitcoin. And for alts that dropped 20 or 30%, it happened just as quick. But don't worry, I have some really good news for you towards the end of this video. And yes, it is bullish for Bitcoin. And no, it's not just a shill or some hopium. This is objectively bullish for Bitcoin. This is really good news that came out this morning. And as I'm recording this on February 23rd, it's a Tuesday, it's 8 a.m., I think the market's going to respond nicely to this, so we'll see how it does. But on this episode of the Profit Maximalist Show, there are two things that we have to cover. First off, this Bitcoin drop and this crypto market-wide drop. How big of a drop do we have to see for it to be a bear market, right? What I think is much more important is market structure versus the percentage drop, but we'll use previous cycles as a good guide, and I'll also break it down with a chart that makes it really simple for you to understand what I mean by market structure and how you can determine if we're still in a bull trend, because you probably want to be buying dips then, versus when market structure changes, and you probably at least want to move some to cash or be more conservative. So that's the first thing we're going to talk about is the Bitcoin drop. And then secondly, it's important to know when a drop like this happens, how does it end? Who's going to step in? Who are the buyers? And there was a really good clip that just came out with Ari Paul. I've had him on the show. He's the CIO over at Block Tower Capital, a crypto hedge fund, and he talked about exactly who's going to be buying in the next 1 to 3 months. That's bullish for Bitcoin, but there's also a special piece of news towards the end, and I think it'll actually explain this Bitcoin drop. So stick around. This is going to be a killer episode. Let's get right into it.
There's only one way out from here. And that's up.
All right, guys. So first things first, putting this Bitcoin drop and the market-wide drop in perspective, it was one of the wildest drops we've seen. And I know price is still sitting at 50K, so it's pretty wild to say that Bitcoin crashed to 50K, but it was actually statistically one of the craziest days in Bitcoin futures history. And what I mean by that, there's a website called BYBT, but they look at data across the market for Bitcoin. And they look at futures and perpetuals, basically where most of the volume trades in Bitcoin, it happens in derivatives. And in the past 24 hours during that Bitcoin drop, we had $4.4 billion of liquidations. And here's what that looks like. Most of those obviously being longs, price dipped to low 40Ks at one point. And all that means is people that were leveraged long, generally retail traders that are extra leveraged, right? These aren't institutionals. Michael Saylor and Elon Musk aren't going to BitMEX or to Bybit and leveraging up. When people get too euphoric, anticipate Bitcoin's never going to pull back and Bitcoin's going to 100K next month, they tack on more and more leverage. And as price drops, it creates this cascading effect where if price drops 5%, maybe some of those people have to close out their longs because they don't want to get liquidated. Maybe if price drops another 5 or 10%, then some of those traders do get liquidated. And it starts this cascading effect where as price drops, it's forcing selling, right? There's forced selling going on, and $4.4 billion liquidated is really tough to see. I think the number that kind of really puts things in perspective and is kind of sad in some ways to see is that 474,000 traders got liquidated. So putting things in perspective, it was a really crazy day, but also at the same time, it wasn't that insane from a market structure perspective. And I'm going to talk about what I mean there. So one of the things that you hear a lot in equities markets or that most traditional investors or analysts or traders are looking at to determine if something is in a bear market is a 20% drop. But if you've been in Bitcoin longer than a year, you know that 20% drops happen frequently. So if we go back to 2017, I would say it's the most similar bull run we've had to the current bull market, in the sense that Bitcoin hasn't gone parabolic since then. We haven't seen this level of retail participation. We haven't seen the strength of narrative with corporate buying. So going back to 2017, I think is probably the best example we have of the current market structure. I think it's far more important to look at the market structure for Bitcoin, and this is going to help you going forward too, versus just rooting kind of your idea of a bull or bear market based on a 20% drop or based on, if you lost a lot of money and then you think it's over, right? It's good to have some kind of system. So going back to 2017, let's say that bull run started somewhere like $1K, $500 is where we started. And then obviously we go parabolic all the way up to 20K. That's where we topped out end of 2017, beginning of 2018, right? Very similar market structure to currently. One of the things that anyone can point out or notice on a chart during a bull trend, right, is higher highs and higher lows. It's probably the easiest way you can determine on your own. You don't need me to do it. You don't need to pay for any service to do it. You can determine if something's in an uptrend based on consecutively higher highs and higher lows. The other thing you're going to notice looking at 2017 as a guide is we had these 20 or 30% drops a lot. Right there's a 20 or 30% drop. That happened in September. We had another 20 or 30% drop that happened in November of 2017. We had another 20% drop that happened later in the month in November, right? Even before we peaked out at 20K, we had another 20% drop, and that was way up in December of 2017, right? So 4 or 5 in almost 4 or 5 months, continually having these 20 to 30% drops, and the bull market certainly wasn't over, because if you thought the bull market was over the first time we had the 20 or 30% drop, price actually went another 5 or 6x, right? From those 3K levels mid-2017. So I think rooting the idea that Bitcoin's in a bull market just because it dropped 20% is probably not a good metric. I know you're going to see it on CNBC. I know you're going to see it on Bloomberg, and maybe you're just feeling it. You're saying, man, that was the craziest drop I've seen. What if that was the top? It's a valid question to ask, but I don't think it's necessarily that good to kind of base it on a number like 20%. One of the things that you can do for yourself, or you can just watch this video, is 2017 is our guide, right? And this happens across all markets, but now we do have a little bit of history with Bitcoin. We know how the bull trend works. We also know when market structure changes. So going back to 2017 really quick before we look at the current trend, this series of higher highs and higher lows eventually has to end, right? The 2017 bull market ended. And the way that it ended was this series of higher highs and higher lows breaks. That's a market structure break. So in a trending market, if we're trending higher, we're going to have a series of higher highs and higher lows. That is the structure. Now, when that structure changes is we have our peak at 20K, end of 2017. Price makes that high, 20K. Our next low is still a higher low, and that's right around 10K. The first warning sign was basically in January of 2018. Bitcoin failed to make a new high, right? 17K. Almost 2 weeks later, price now also makes a new lower low. So now we've gone through a full year, 2017, that bull market, where every single time we had a 20 or 30% drop, we would rise up and just form a new higher high and higher low. When the market structure changed, that was the warning sign. It had nothing to do with 20 or 30% drops. I just don't think that's a good guide for an asset that's as volatile as Bitcoin. But when the market structure changed, and that was right here, right, basically January of 2018, market structure changed. We're no longer getting higher highs and higher lows. So using the market structure is just going to give you a way better idea of whether or not there's still strength in the trend, whether or not buyers are still stepping in, whether or not we're able to push to new highs. Those are the types of things to think about whether or not Bitcoin's still in a bull market. Right? So as we look at the current trend right now for 2020 and 2021, you could really say it started in March, or if you just want to talk about when Bitcoin really started going parabolic, you could even use September of 2020. Right? Let's just use that to keep things pretty simple. So our first high that Bitcoin made before it had a pretty nasty retracement was way back to November of 2020. It's kind of funny to say, but Bitcoin found a high at 19K. That sounds so cheap right now. And the low after that drop was right around 16K. Okay, so some people probably thought the bull market was over, but nope, we continue forming new higher highs and higher lows. The next high that we made on the daily chart, right, was right around, this was January of 2021. This is only a month ago, right? Price moved all the way up to about 40K, and then we had another 30% drop, right? So price drops 30%. I know some people are saying the bull market's over, but still no break in market structure. In fact, we continue forming new highs, and that's where we're at this week, right? So our current high is 58K. That is the all-time high for Bitcoin. It's also the local high or the cycle high right now. Right? In order for us to form a higher low, right, you'd obviously not want to see Bitcoin dropping below basically 30K, and that was the low of last month. We're just looking for changes in market structure to determine, is this bull market done? Because you're never going to time the top, you're never going to exactly buy every single bottom, but you can get a very good idea of, look, market structure change way back in 2017. All right, maybe the bull market's over. I need to take a break. And I think we have the exact same setup here of you'd get a pretty good idea of a change in market structure if Bitcoin cannot hold lows at 30K, then you start asking yourself, okay, that's a little bit worrisome, especially if we go up here and put in a higher low, right? That's a change in market structure. I probably at least want to have some cash on the sidelines because we might have to wait a little bit for the bull market to kick back in, right? But that hasn't happened yet. We haven't had a change in market structure. If anything, this is kind of par for the course. This is Bitcoin, right? It's the best performing asset in the world. And when it's going up, 10x or 5x each year, yeah, the drops are going to be vicious. That's just how it is, right? So 20 or 30% drops, I don't think you can call for the end of the bull market just because we had a nasty drop like that. I think it's so much more important to look at market structure. And that's something that I think everyone listening to this or watching can understand. And you can do this on your own. You don't need me to do it. It is quite simple to map out higher highs and higher lows. It's not some crazy technical analysis. It's not tea leaves. It's not predicting anything. You're just simply looking at, is the trend still intact? And if the trend is intact, I probably still want to be exposed to Bitcoin. So I know it's been a nasty day. If you're holding any Bitcoin, you lost money. I'm down money. But it is what it is, and you kind of have to accept that Bitcoin is going to have these retracements. All right, so now we have a little bit of context. 20 to 30% drops during a bull market are normal, and I just think it's more helpful to use market structure versus tying a 20% or a 30% and trying to guess whether that's going to be the dip that causes the start of the bear market. You have to start looking at, is the trend intact? And right now, we are very far away from that breaking, which brings me to the second point and really why I'm making this video. Who steps in now to take us to new highs? How do we get to 60K, 70K, 100K? Does the bull market last through 2021? And this is really, really important. You have to ask yourself, are there enough traders that got wiped out? Is retail not going to step in? Are people super scared? Is everyone going to wait for the dip to 20 to 30K? I don't think that's going to be the case. And rather than try to convince you that I'm right, because I don't need to do that, right? It's your money. You do whatever you want, whether or not you think the bull market's over. But you do need to listen to this news clip that just came out yesterday. This is Ari Paul. He's the CIO over at Block Tower Capital, Chief Investment Officer over there at that crypto hedge fund. And he laid out perfectly who those buyers are going to be for the next 3 to 6 months and why I think this does drive us to new highs and the bull market lasts through 2021. Listen to this clip.
As a function of time, Bitcoin price is going up just because word is spreading and people are allocating. Look, Elon had his announcement that Tesla bought Bitcoin. It takes a month, 2 months, 3 months for other investors to go through the institutional allocation process. There's a time lag. So there's this mountain of money that's still coming into this. Basically, if nothing changes, there's another $10 billion of institutional US buying going to happen over the next 6 months.
And that right there, I think, is still the biggest catalyst for Bitcoin this year. Elon Musk and Michael Saylor have both kicked it off. Corporate treasuries buying Bitcoin and all the other corporations that are going to follow them. Even if it's only a couple at first, it's going to be gradually and then suddenly. That takes time, as Ari said. It's going to take 3 to 6 months. Those tens of billions of dollars take time. And they're allocating to Bitcoin. They're not trying to time a 50% move. They're allocating for 10 years, for 50 years, for 100 years. They're buying the dip, and I do think that's what keeps the bull market alive for 2021. So 2 big things to keep in mind. First thing is the market structure is still intact, and you can't just think of every 20% drop as the end of the bull market. If you used that rule in 2017, you would have missed out another 7 to 10x of upside. Once again, you're never going to time the top, but if you use market structure, you get an idea of when the trend is actually over versus a violent sell-off. And the second thing, these corporate treasuries that are buying Bitcoin, Elon Musk and Michael Saylor, these guys that have been driving a lot of this Bitcoin move, there are a lot of other companies that are in line, and it's going to take them 1 to 6 months for them to pile that $1 billion, that $10 billion in. But when they do come, they're buying the dip, and you guys have seen how price reacts. And so that wraps up this episode of the Profit Maximalist Show. Hold on, I still have one more piece of bullish news, but for this episode, that wraps it up. The Bitcoin drop was vicious. Yes, it's a horrible way to start the week. No, I don't think the bull market is over, and I have a ton more of these market updates on the way for you because we have to look. If the dip does get deeper, I'm going to have to kind of change the way I'm thinking about this trend. I'll make a video if that happens, and also if we do start bouncing, I'm going to be covering what's moving the fastest. Is it DeFi? Is it exchange coins? All the trades, trends, and themes happening right here on the channel. Hit the like right down below if you guys enjoyed this video. Also subscribe, have some killer updates and interviews coming out. I'm speaking with one of the top 100 profitable traders on Binance. It's a crazy episode, Rookie XBT. Subscribe so you guys hear that. And also drop a comment down below. I want to know what you guys think about this Bitcoin drop. Where are you setting your buys? We actually go down to 20K this month, or are we going to start moving up to 60, 75? Is that possible in March and April? I want to know what the hell you guys are thinking about this Bitcoin market. And before you leave that comment about your thoughts on Bitcoin, consider this news that just hit the timeline. I promised you a piece of exclusive news that just happened today. So if you're watching this, this is fresh. I want to see how the market reacts to it. Tether, the stablecoin, the biggest stablecoin in the market, which people have long thought is fraudulent, or it's not backed, or it's the only reason that Bitcoin pumped, right? And if Tether goes down, that could be brutal for Bitcoin. It could be a really bad news event. This just came out. Tether and Bitfinex have reached a settlement with New York State Attorney General. After 2.5 years and 2.5 million pages of info shared, they admit to no wrongdoing and they pay $18 million to resolve the matter. So basically admitting no wrongdoing. New York State Attorney General does not have a case to prosecute them. There's no finding that Tether ever issued without backing or to impact the crypto prices. Right? That is a really big piece of news because people have always pointed to Tether as that's going to be what brings Bitcoin down, and Tether's the only reason that pushed Bitcoin up. I don't ever think that was true, but this is incredible news. It just reduces one of the big risks for Bitcoin if this did turn out to be a really bad case. So that's all I got, guys. We covered the Bitcoin drop. We covered who's going to be buying and whether or not they could actually take us to new highs. And I also have that piece of exclusive news. Hope you guys enjoy the show, and I'll see you on the next video. Peace.